Hello everybody, my name is Akash. You can follow me on Twitter at Mangek with a zero at the end. If you click this link in my bio, it will take you to my YouTube channel where I post a Bitcoin update every single day. And yesterday it was really interesting because I kind of recorded this video, uploaded it to my YouTube channel, and did not post it on Twitter, but I only posted it on LinkedIn. And in this video, right, I took a short setup that was perfect. Like it played down to the T where I expected Bitcoin to go. It did exactly that, right? I took profits, and you can see that on my Twitter over here, right? It was a really good thing, but I didn't post it on my Twitter because I know a lot of my followers do not actually like have clicked the bell icon, right? So if you haven't, and if you don't want to miss out on trades like this or this Zilliqa trade that I posted the other day, make sure to hit the subscribe button and also click on this bell icon, right? So let's get into today's agenda, right? Unlike the daily Bitcoin update videos, today's video is going to be an educational content, first of its kind on my channel. So I'm going to be taking a look at triple tap setup and explain to you what a triple tap setup is, how you can identify that in its infancy, and how you can trade it, and different variations of it, right? And the reason why I kind of am doing this today and not a few days ago or not a few days later is because I was writing a Shiba Inu article, and I spotted this triple tap setup. I spotted a potential where it could form a triple tap setup, right? So I thought I'll just make a video of it, right? So let's get into what a triple tap setup is, right? So basically, a triple tap setup is when the price forms a swing low, goes above it, comes back down, deviates below that swing low, giving you an impression of a downtrend. But ideally, what happens is the price goes up again, comes back down, retests the initially formed swing low, and then boom, it rallies higher, right? So to give you a quick overview of what it means, right? So exactly, what is a triple tap setup? Triple tap setup is a derivative of a traditional triple bottom or triple top setup, where it usually denotes the end of an uptrend, and it is formed after the uptrend, right? It is basically a little bit of consolidation that takes place. So what is a triple bottom setup? Triple bottom setup, you usually basically you have a support level, right? And the price tags the support level thrice, which gives it the obvious name triple tap setup. Right. Again, if there's a triple bottom, if there's a triple top setup, the price rallies first, and then let me just quickly give you an outline. Right. So triple top setup usually has this boom, boom, boom. You have a resistance level, you tag it thrice, and then you go down later. So this basically signifies a top reversal. Right. This is called as a top reversal, and the exact opposite of that is a triple bottom setup, and it is a bottom reversal pattern, right? So the way triple top and triple bottom setup differs from the triple tap setup is that instead of having all the taps on a single line, excuse me, yep, instead of having all of them on a single support level or resistance level, triple tap setup usually does something like this. It creates a low, range low, and then deviates below the range low, and then it tags the range low again, and then continues to go higher. So basically you have a range low that is formed, and then there's a deviation below that range low, and then the third and the final retest of the range low, which leads to an upswing. And you can spot triple tap setup, a bullish triple tap setup, at the end of a downtrend, right? You have a massive downtrend, price does this, boom, does this, boom, and you have an uptrend, right? Now this is 1, 2, and this is 3. Similarly, you can form triple tap setups can also form after a massive rally. It does this, you get boom, boom, boom. Done. That's it. Now this is 1, this is 2, and this is 3. Right. So basically, this is a very crude depiction of what a triple tap setup is, right? So let me just go over what I've marked here, right? I'll just show you an example. Right. This was formed on Bitcoin's 30-minute time frame in March, if I remember correctly. Right, so you have a range low that was formed, a deviation below the range low, and then a retest of range low, followed by massive run up. Now you have another example where the price, there's an initial run up, it forms a swing low, deviates above the swing low, and then it retests the range. I'm sorry, this is a range high, swing high, right? And then we get a retest of the range high or swing high followed by a downswing. So basically that is how a triple tap setup is. It's pretty simple, as the name suggests, right? So you usually have a triple tap setup after a sell-off or a run-up. In this case, it's a run-up, and in this case, it's a sell-off, right? And there's a tight consolidation during a triple tap formation, right? So when there is an actual formation of a triple tap setup, there is tight consolidation, as you can see here. Even here, there was a very tight consolidation, right? So wait for the price to move away from the formed range low or the high, and then followed by a deviation of the range low or high. So basically I'm talking about this one. Wait for the price to deviate away from this formed range, and then wait for it to deviate above the range high, right? And then you have to allow, so when this happens, right, it might seem frustrating, but you have to be patient and wait for the price to kind of deviate away from each of these lows, right? Sometimes what happens is the price just forms a range high, deviates above the range high, and continues going lower. And now that is a possibility, and you could miss out on the trade. So you have to kind of exercise a lot of patience and wait on the sidelines, right? So the third and the last point is give the price action some room to move. Wait for the third tap on the initially formed range high or range low. On the initially formed range high, wait for the price to retest this initially formed range high. All right, so basically this is how a triple tap setup is formed, and here is the line diagram representation of it, right? Range low forms, deviation below the range low, and then a retest of the formed low. Right now, this is a textbook representation of a triple tap setup, and more often than not, you don't get a textbook reversal, right? You don't get a textbook formation. Like this is a perfect example of a textbook triple tap setup, because the price has actually retested this level, right? The initially formed range high. But as you can see here, if you haven't already noticed it, see the price didn't actually retest the initially formed range low, right? So the possibilities of this are like there's a lot of possibilities where this can happen, right? So yeah, basically this is how a triple tap setup is. So let's talk about another thing, right? Like say you have a triple tap setup, but then it doesn't go. Like say something like this happens, right? There's a massive rally, right? And then you get a triple tap setup formation, and boom, right? Instead of going up like it is supposed to, what happens is the price continues to go lower, right? And the reason for this could be pretty simple, right? When you identify a triple tap setup, it is very crucial for you guys to understand liquidity objective, right? So I'm a price action trader. I don't much look at indicators except for moving averages every now and then, just to give you, like, it gives me a sense of what's happening in the market, right? So liquidity objective is a pretty important factor when you look at triple tap setups, right? For example, in this particular move, right, there were tons of liquidity resting above these swing highs, but what price did is it rallied up, collected all of the sell stops present. So people that shorted here, right, usually it happens something like this, right? So people that short here, they have their stop losses somewhere around here, and then they have the take profit levels somewhere around here, right? So what this move did here is basically ran the stops of these short positions that were here. So that's what I mean by liquidity, right? A collection of sell stops or buy stops present. So all of the stops present above this high, this high, this high, this high was collectively collected when the price made this move, right? So the liquidity objective doesn't really make sense, right? So let me just okay, wait, this is not a perfect representation, so we'll get something like this, and then we get this, and then we have this, right? So in this case, it doesn't really make sense for, now this is a triple tap setup, right? It doesn't really make sense for the price to like go higher, but instead what could happen is what actually happens is the price goes down. Now the reason why price goes down here and not go up like expected is because, as I mentioned, the liquidity here, here, and here was collected when price made this move, right? So you have to be careful of identifying liquidity, because if there is no liquidity objective to the upside, then there's no point in identifying triple tap setups, right? For example, right, in this example, let's take a look at it. So wait a second, this is the first, second, and the third example. Right, so in this example, you can see there was a good range low, the range high that was formed, and then there was a deviation above the range high, followed by a failure to not retest the actual range high, but that's given. That's a deviation that usually happens, right? So here the liquidity objectives are this swing low that was formed here, right? And then there's another swing low that was formed here, and then there were. So the reason why I marked this and not these two levels here is because like this is when the low was actually formed, and these two are just deviations. So you kind of like, even if you don't want to, just book profit here and forget about these levels here, right? So either way, now this was a really good 4-hour trade, which is since it's on a 30-minute time frame, the actual move is around 5%, right? So although in percentage terms it doesn't feel like it's a lot, it is when you actually trade with leverage and all that kind of stuff, right? So yeah, this is a really good example of what a triple tap setup is and how you should trade that. So now let's take a look at another example where the price actually goes higher. In this case, start here, right? There's a range low that was formed roughly around the 11th, not sure what month this is. Yeah, I think it was, nope. So range low was formed here, and then there was a deviation below the range low, and then a retest of the range low, right? So like I mentioned, right, you don't always get a textbook triple tap setup. Sometimes the price doesn't actually come down to retest the formed low, and sometimes the price deviates below the range low. Now if you had opened a long position somewhere around here and placed a stop loss somewhere around this level here, you would have been stopped, right? So ideally I would like to keep my stop losses below the deviations swing low, actually a little below that, right? So this is how I open my positions, right? So for this particular setup, the liquidity objective, it was really interesting, right? Because there was an equal high that was formed before the triple tap setup was formed. So this would have been my first take profit level, and the second level, obviously since there is no swing highs formed here, I think this is the most appropriate take profit level, right? And another reason why I would set my take profit levels around here is because of the FVG that was formed here, which is a fair value gap, right? So basically when price retested the support level here for the third time, that's where I would have longed, and this is where I would have taken like 25-50% of my position, and then I would let the rest ride at least up to this point here, which is where the FVG ends, and then it is roughly at $41,700, right? And then I would probably leave like 10% for the price to go, 10% of a position, expecting the price to go and sweep this high, and it actually does after a little bit of consolidation, right? So yeah, so this is another example of triple tap setup, right? So let's go back to the document, right? We have the examples, and yeah, that is pretty much it for the triple tap setup and how to trade it, how to identify it. Right now, let's move to what's actually happening with Shiba Inu, right? So I wrote this article just now, it was published just now, where I'm kind of expecting 60% upswing on Shiba Inu. So let's quickly take a look at what's happening with Shiba, right? So right now I've marked this descending triangle, which usually kind of has the bias for descending triangle is that it breaks down, right? But considering what's happening with Bitcoin, and since I'm bullish on Bitcoin, I'm expecting Shiba Inu to like do one last retest of the base of this triangle and then move higher. Right now, this could be looked at a couple of other ways. So let me just show you what I mean by that, right? So if you go on a line chart, right, you can mark your support level here. Now this becomes a range low. This is a deviation of the range low, and then you have another potential retest of the range low. Right now, this is a really good triple tap setup because the liquidity objective above this, and this are virtually untapped. Right above this is also untapped, so it would make sense for me to book profits around these levels, with my last take profit level being this level at roughly 137. Right, so this is the reason why I kind of got the idea on doing a triple tap setup, right? But that said, right, on a 4-hour time frame, you can see that that's pretty much it. that's pretty much it on the triple tap setup, an example of triple tap setup, right? So but for Shiba Inu, what I'm going to be doing is I'm not going to enter a long position right here. I'm just going to wait out and see how Bitcoin actually does. I am expecting the price to sweep the Monday's low. So until we get to sweep the Monday's lows, I'm not going to be opening any altcoin positions. So yeah, that is pretty much it for today's educational content, guys. If you enjoyed this video, please make sure to like, comment, and subscribe. And if you have any doubts or whatever, just make sure to reach out to me on Twitter at Mangyako with the 0 at the end. Right, I would be glad to receive any and all feedback from you guys. So have a good day. Peace.